Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. It is March 15th. We're halfway through this month already, blasting into, I feel like if we blink, this one's going to be gone as well, and we'll be talking about tax day. One day till tax, or I guess 1 month till tax day. It's just right around the corner. So with that said, let's go right into things today. There's actually just minutes ago, there was a headline that came across that has definitely had at least the NQ I saw before I hit the go button here. Already starting to roll. And funny enough, it went right off a technical level we talked about this morning. It just happened to coincide with the exact moment that headline came out. So it's always funny when that matches up. So with that, for those of you that are new here, welcome. We have our repeats every week. Every week we get some new people in as the channel is growing. I'm the president and CEO of Keep Trading Simple. I'm actually not a Nadex employee. I've been partnered with them now for a couple years, doing education events for them, analysis sessions. I wrote some articles for a while as well. As you guys know, Todd and I host a morning show that we broadcast on YouTube, where we look at kind of what's hot in the markets for about 15-20 minutes, depending on what's going on for the day, 8:45 to 9 a.m. Eastern. I've been doing this for a while, so a lot of people are always like, well, where did you get your experience? I'm actually like most of you out there. I'm not a 12th generation trader. I'd always been drawn towards the markets, even in elementary school, and when we learned about the stock market, I just absolutely loved it. And I remember my, I won the trading contest in, I think it was what, 7th grade, 8th grade. GlaxoSmithKline got it for me, so I'll never forget that. But I really started to get serious about it in 1999. I'm what I would call a Y2K trader. I learned what it was like to trade crashes in the market very, very fast. Started with stocks and traditional options. Found currencies, understood the benefits of leverage in that 24-hour market. Eventually learned traded futures as well. I understand things on both the income side as well as wealth style trading. I was a financial advisor for one of the big 3 banks, so I got to go inside and kind of look at it from the kind of really the internal side of what the markets are. Realized very fast it was nothing like I thought it actually would be. What the actual job was versus what I knew how to do and what I was capable of doing. It just didn't necessarily make any sense to me. So I left and went back out again, spent some time, about 6-7 years traveling around the US and Canada. I did work on Wall Street. I can say that I did not work on one of the exchange floors. I was not a runner, but I actually lived 2 blocks from the New York Stock Exchange. I walked past it every single morning, but I did work on Wall Street. So I did, the bull was right outside, and I would, converse and actually, did actually teach a couple different floor traders about the markets. People that were students of mine. So, but for the most part, I'm out here to teach people how to trade, do it themselves, not use the big banks and institutions. I do stay very busy. If you guys know, this is an old picture because of COVID. I don't have an updated picture. There's actually a boy now that is about a couple months shy of what Jin is in that picture. Jin's hair now is down to her butt. Both the boys are much, much older. Reese, the one on the right side of that picture, is actually taller than Melissa. So obviously we need to update it a little bit. I say that every week, and I keep saying that because eventually my wife will be like, you said it again. We need to get it done. So we have a funny relationship like that. So with that, because I'm going to mention charts and risk and things, we do have to cover a Nadex risk disclaimer today. They are the sponsors of today's program. The trading on Nadex involves risk and may not be appropriate for all. And members risk losing the cost at the end of the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility at your own risk. Past performance is not necessarily indicative of future results, and none of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the Crypto.com group, not the IG group. I saved that last week. I don't know why. Maybe I saved it and then typed it and then saved it again. I don't know. But it's they are now owned totally by Crypto.com. So what we're going to cover today, whoops, we're jumping ahead, already going there. Okay, now the mouse wants to be super touchy. First things we're going to cover upcoming news events. As I said, minutes before we went live, there was a comment made by Putin that turned NQ right around on a level we talked about earlier today. We'll cover the upcoming news events. It's a very big week, particularly tomorrow. It'll be the first U.S. rate hike. We know it's in. It's just a question of how much and what is associated with it. Then we would go over and look at indices. As I said, NQ already has some movement. There's been some great data thus far. We thought everything was going wonderful, and then bam, a sudden change. Forex after that, again, Forex market's actually a little slow today. Again, with a rate change tomorrow, though, there will obviously be some movement, and yeah, there'll be some stuff going on the rest of this week with Forex wise. But right now, a little bit flat, and again, that happens. Not all markets move at all times. And last but not least, commodities. Now, where Forex is flat, commodities definitely not flat today. Gold is continuing to kind of tank. Oil's been kind of a little bit volatile. The joke this morning was, it went up $30 in a week, and I watched my gas prices locally go up $1.50, but it's dropped $30 in the last week, and it's only gone down 8 cents. So it's not quite keeping up. We'll see kind of where we're at when we look at it again. With the comments that were made, I wouldn't be surprised if oil starts moving around. And we've also got some other news this morning, basically that again, some threats to the dollar globally that just came out in regards to oil. So it's kind of a half currency, half oil news headline that I want to bring up. And again, the implications of that could be huge. So a lot to cover today. So with that, let's go right in and let's talk about news. There's a lot of stuff to discuss here. So first things first, again, I always like to take kind of the bird's eye view of things, right? Bird's eye view wise, you would look at currencies and say, hey, listen, in the last 24 hours, there's not really a lot moving. Dollar Swiss is up a little bit. And again, that's kind of, everybody was talking about world peace a little while ago. The Aussie, we know, again, commodities associated starting to kind of come to move to the downside a bit. Dollar CAD, it was decent earlier today because, again, oil was just evaporating, right? But now it's starting to kind of level out a little bit at 27. Besides that, there's no currencies at anywhere close to a daily ATR right now, which shows that there's a little bit of a consolidation and kind of a question of, that's interesting. Why is it not moving? Again, tomorrow is the big day as far as when currencies should be all over the place, as well as, again, peace talks, right? I mean, you're seeing, US, Euro USD rate strengthens, right? Amid Ukraine peace talk optimism. It's kind of, things have changed a little bit. So let me go over some of the big headlines that we're seeing, right? So we know about the Chinese sell-off, right? For those of you that don't know what that means, and again, this is kind of a, let's see, where is it? It was down here a little ago, and I've refreshed it a bunch of times. But basically, 51 million people are now locked down in China. Let's see. They want to avoid sanctions over the war. Yep, of course they do. Everybody wants to avoid sanctions. It's just don't misbehave. I'm not going to find it now. Anyway. Oh, was it? Maybe it was up here. 51 million people right now are locked down in China amid the surging COVID crisis. They are seeing a surge again. Not necessarily the best thing. Why I'm bringing it up is because originally a lot of the supply chain disruptions came out of China. Locking down 51 million people. It's also the reason why oil is going back down again. Why? 51 million people is a lot of demand for oil. So that's kind of one of the big things that again, large market mover. Okay. Now, those people won't stay locked down forever. Again, we talked about this morning. We mentioned how the way that they handled COVID was absolutely different, right? Their response was, you got 5 people in this town, the whole town is locked down, don't leave, right? The United States was kind of like, yeah, we'll do what we can, wear some masks, try to avoid each other, don't cough on anybody, we had much higher numbers, and a lot of people criticized the way that we handled it, but the reality was nobody really knew truly how to handle something like this. We've never seen it before. So Omicron, basically everybody getting COVID was what got us out of COVID, right? Because it didn't seem to matter if you were vaccinated or not. A little bit different in China. They didn't have the numbers that we had, so they're seeing it now, and they're trying to lock down and halt it coming again. But that halting last time caused supply chain disruptions. It started the inflation story that we're at right now, so the Fed is going to have to carefully weigh that. Okay, so that's one headline out there today. Again, giving us some movement in the markets. Number 2 was this one. Okay, we got this one about 2 hours ago. Basically, Saudi Arabia has said that they've been in price talks with China to start pricing oil, which is typically priced in US dollars, in Chinese yuan. Okay. This is not a good thing. Okay. They have on and off talks have been accelerated, right? Amid Saudi's discontent with the United States. Remember this, Biden has basically said, yeah, we would like to, we'd like to get some more oil from you. And Saudi Arabia's response was basically pound sand. The Wall Street Journal commented that they reached out and they basically wouldn't accept the call. And the White House was like, no. They talked. Again, I don't know if the White House is trying to save face or what it is, but again, the Wall Street Journal is one of those sources that tends to report good facts. It's one of those ones out there that you tend not to see anything really politically motivated, and they're not they tend to validate their sources. And now we're seeing kind of the same thing here. And this is the headline that I'm saying is important. This move would dent the U.S.'s dollar dominance of the global petroleum market. Remember, one of the things that the dollar has kind of a special advantage of right now is being the world's reserve currency. We can get around. We can get away with a lot that other countries cannot. Okay, if that is threatened, and again, they're saying here that China buys more than 25% of Saudi Arabia's oil. If they decided to switch everything over, and we lost this dollar dominance, that really goes back to the ratings for bonds, everything else out there. Again, it really could mess with the debt, the value of the dollar. It could jack our inflation through the roof. If no other country in the world can run with the deficit that we run right now and hold their ratings, we wouldn't be able to either. So this is really kind of negative news. And again, talks about it right here that they've been accelerating their talks because again, the Saudis are growing even more unhappy with Washington in every kind of again, Wall Street Journal article right here, WSJ.com. You can go read it out there. But again, this would be a major shift out there with kind of overall power with the way that they handle things. And again, Saudi officials have said that they were shocked by the precipitous U.S. withdrawal from Afghanistan last year. So again, even the Saudis were not very. They're just unhappy in general. So yeah, that's some big news. And again, this will kind of affect how oil is moving as well as the dollar, as well as the Fed discussion for tomorrow. Okay, number two. Thus far this morning, things like this, both sides have been very, optimistic, right? Both Ukrainians and Russians have expressed optimism about the chances of a ceasefire being agreed upon. And again, the markets are moving. And then just minutes before, bam, right? Putin coming out saying, yeah, listen, they're not actually serious. We were very optimistic, but they're not serious about finding a mutually acceptable solution. Okay, bam. And again, is that a big deal? Well, if you flip across, you can look at something like, where is it, the NQ? That was flying high, and then Putin's message came out and dropped immediately like 100 points in just seconds. Okay, now it's kind of like, oh God, are they serious? Really? So again, also a very big comment. I'm sure we'll hear a little bit more about this right now. Kind of interesting, right? The data we got this morning, and again, out of news headlines into actual economic events, German economic sentiment, horrible. Now, again, it was expected to be bad, so everybody sees it. It's like, oh my God, it's so bad. It was already expected to be bad, and it's hard to put a gauge on, how to talk about what the economy looks like going forward when there's war right next door. I mean, you think about it. If you're in Germany, it's like, wait, Russia could cut off our gas at any time, right? We just made comments about we need to be not relying upon them. Obviously, it's going to be a pretty negative number. So the market kind of expected that, right? PPI numbers came in lower than expected, but remember, one of the things last time is they missed it by such a large amount. Predicting what it was going to be successfully this time is kind of like a guess because they expected 0.5 increase. It was a 1.0 last time. It was double. So this time, like, well, hey, we have to go to 1, right? It was a little bit less, but remember that, again, the trajectory was so off last time. That's adding into it. Manufacturing down again. The Empire one is they've been a bit more negative. Philadelphia Manufacturing Index has been not bad. They were good, then they were somewhat bad. Kind of one of those things that you got to watch out for. And then again, obviously, Lagarde is speaking right now. We're getting some of those headlines. So going into tomorrow. So tomorrow is going to be the big day. Okay. Big day wise. Wow. I don't even know where to start on this one. Okay. 8:30 in the morning, we start off with CPI in Canada. Canada's had some really great numbers lately. I think that, again, we are going to hear rather soon about when Canada is going to start raising. The dollar CAD has been a very interesting pair to play because of oil, right? It's kind of almost decoupled. U.S. is starting to raise interest rates. Everybody knows it. Canada has been kind of quiet. They're going to start talking about raising interest rates as well. That could also provide that pair some interesting movement, especially if we see that, again, the dollar's threatened, et cetera. Oil goes up again. Dollar CAD has the ability to really kind of take a big tank, or at least the Canadian economy going higher. Now, we have retail sales also, and they're forecast to be a lot less than what they were. And it's kind of the same thing. Last time they were expected to be 1%, and they were completely off. It was 3 times higher. It was like, wow, they're absolutely raising it. So if even say, I don't know, even if we hit it, I think, the market is preparing for that. It was a huge miss last time, right? Retail sales comes in, again, they're expected to be bad. If they come in again higher, wow. I mean, that is every reason in the world why the dollar has to raise. Now, the Fed has this data today. They obviously know what the retail sales numbers are going to be. Question is, what do they craft it as? It's not like they're going to wait like everybody else and say, wait a second, let's not make our determination until we have the core retail sales numbers. They kind of already know, right? And then we have crude oil smacked in there as well, right? Last time there was a bit of more of a down draw than expected, right? Oil's really pulled back a lot, and it's more about what's going to happen in the future with oil. Again, 51 million people locked down is a little bit more of a driving factor than our 1 million barrels down over a week. So that's going to be a bit more kind of there. And then, bam, 2 o'clock tomorrow. Okay. Economic projections, the statement, and the official raise. Is it going to be 0.25, or are they going to raise it 0.5 and take us up to 1.75, which is what I think really, really, really needs to happen. But I have a feeling that they're going to limp into this one and just, again, maintain a kind of a weak dollar stance. Yeah, it's kind of not what the US dollar needs right now, but yeah. So I think the way to play tomorrow morning, it's going to be kind of one early morning trend where people are going to see the retail sales number, and then we're going to kind of flatline and kind of prepare for what happens with FOMC. Okay, we'll see if there's any more of the Ukrainian situation that kind of spills over tomorrow morning. It could, maybe not. I don't know, and I don't have a crystal ball for it. But we're going to have the initial shock of this, especially if this retail sales number, say this comes in at 1.5. I mean, if it follows suit last time, and we'll cut it in half. Say it's not 3 times higher. Say it's only 1.5%. People are going to be screaming for this number, going to go higher. So what we'll probably do is have a bit more of kind of a lull, right? A lull inside of the markets, okay? And then, right, after FOMC, we have New Zealand GDP, again, expected to be much, much better. Then we have Australia tomorrow night, again, expected to be good. Will the Aussie dollar start kind of picking up some steam as they start getting interest rates rising? We could have a really big surge with the US dollar, and then profit taking can come in 8:30 p.m. on tomorrow night. May have some Aussie movement. So again, nice little kind of, I don't know. I mean, it's kind of like we could start with a strong CAD and then go strong dollar and then go strong Aussie. A lot of currency play on Wednesday. It's chock full of news, right? Thursday, now we have the pound raising interest rates, right? Going up another 0.25%. That's the forecast. Now, do I think the pound will accelerate past? Will they go 0.5? No. They've been pretty measured in their 0.25, but again, it is the pound. Again, why this is important. If we only limp in and do a 0.25% and we're at a 0.5 after tomorrow's Fed funds rate, meaning if you leave your money there, you have a 0.5% interest rate payment that you're getting. Going into Thursday, if they raise the 0.75, now this 0.75 puts the pound back in contention to be the leader in the carry trade. Remember, when you can get more money by holding a foreign currency than we can locally with any CDs or anything else, and again, 0.75 would push us over that. Now there is a benefit to hold the pound. The pound will receive strength for that. Now, it's kind of baked into the market, but you will start seeing large banks and institutions buying up the pound, right? You'll see pound strength coming in because there'll be a need, kind of a desire to get more than what the regular rates are, right? And you're definitely not getting in a savings account or anything. So them pushing forward, I think, is that's something on Thursday. Bam, another big currency release. And then we have some unemployment claims, not expecting much there. Industrial production, not worried about monetary policy in Japan. They like to keep it low, not concerned about Japan right now. And then Friday, we have some retail sales for the CAD, Japan press conference, and existing home sales, which is, going down a little bit, not expecting to really move the market. The question I have for Friday is, are we going to get some type of, I hate to use the word peace. I guess the first step is going to be a ceasefire. But if we can get a ceasefire, if we do a 0.25 raise on Wednesday, which again is considered awesome for the overall stock market, it's weak for the dollar, very, very weak for us as a nation. If we get that, and then say we get some type of negotiated ceasefire or something positive, it could be a heck of a Friday. It could be an absolutely huge Friday. Now, again, if we use, if there's chemical weapons or something else, then obviously that would cause a problem. But for the most part, right, if we have that week 2.5, right, everybody else raises, and we could get that term ceasefire out there, or at least optimistic, like, hey, we're meeting over the weekend, and that's just to figure out the final details, that could be a boom for the indices. Absolute boom. Okay. As well as we can see the euro dollar collapse, right as the euro gets, strong versus us. The pound in particular, right? The pound in particular could be a big one. So a lot of potential going into this week. And then again, Saturday nothing, Sunday nothing, and the next Monday really nothing on next Monday either. We don't really start up again until next Wednesday with the big news releases, and we'll meet from then till now. So that's our news for the next week. Let's jump over and just really start diving into some of the indices. Now, obviously, VIX-wise, the VIX is kind of having a hard time keeping up. Everything was looking good, right? It always gaps in the overnight, right? Peace talks was driving this one down, and then all of a sudden Putin comes in and says, "What? Listen, they're not serious. They're not serious. We thought we were gaining ground, and then boom, the VIX starts to spike." Okay. So that's probably going to start affecting this as we already saw. The dollar, again, the dollar is starting to raise again. And a lot of this is speculation. Again, the peace talks sounding like they were great. The news out of Saudi Arabia, again, that's more of a commodity issue right now, but that's kind of coming back. It's like, yeah, we're doing good, right? But the dollar is starting to come back to levels of sellers, okay? Now you may say, well, won't this explode through the roof tomorrow with the raise? Yeah, technically it should, but the market has already factored in that 0.25. If we get the 0.5 in there, yes, this will spike up a bit more in the dollar. But there is a lot of sellers up here. 99 is extremely high as far as the dollar index goes. We're not trading the dollar directly, but just understand that this controls a lot of the currency positions out there. So keep a watch on it. Now, ES this morning, let me drop these down to a 15-minute, okay? So earlier today, we talked about kind of the European market. And here's with the European market. It's funny. It's actually, this was the European reversal. European market opened here, and this was kind of that 5:30-ish in the morning reversal. It's more or less been straight up, and we've talked about how technically, right, as far as technical analysis goes, we don't have any sellers sitting in there up until the 42.38. There's nothing, right? And there's kind of just a pullback. There was a little bit of a chop here right at 9:30. Like, what do we do? Are we taking profit? Are we going long? What do we do with it? And it kind of chopped back and forth and started to grind higher. Why? Because everybody's optimistic. Peace is coming. Go peace. And then, 11:45 this morning, we were up at that same level where sellers were. And where was it? Was it this one? Yeah. 11:54. They're not serious. And that happens to be where this red line came in. So, yeah, there's that. So the real question is now, again, it's after 12 o'clock. New York traders, a lot of floor traders, they are out to lunch. They've seen this headline. That's why there's the pullback, but we're at extremely low volume time. Question is with that, if the Ukraine says something or we start getting details about how they're not serious and what the result of them not being serious is, this could be this could be a potential area where there's reversals. Now we are up at the 50%, right? We talked about this earlier. We talked about the 50% retracement level as being a kind of technical, computer-based level. A lot of people know that it's there. It's very, very easy to draw. It's literally taken top to bottom. It was already there when the news came out. So it's funny how price drove it right into that level. I think, at this point, we're kind of driving back into it a little bit, but that 43.38, it's a tested area. Sellers have been in there. Putin is now making comments that are bad for this one. FOMC is coming. A lot of stuff out there. If you're looking for shorts, this could be a potential opportunity. Now, again, I typically like to get into positions when there is a increase in volume coming, not when we're stuck in kind of like the doldrums of lunchtime. But that's the reality of the scenario right now. Is it's already there. It's already pulled back a little bit. There was what it was there. Let's see. Go ahead and measure this. The immediate response was about a 25-point drop. It's quite a big drop, right? So you may have already gotten out with that 25. You may be looking for it. Again, a good area to watch. It is not the most tested. It is a tested area, right? We've already kind of seen one hit here. We've seen another. We've seen another. We've seen another. So it is not the freshest of areas. We typically like to get into things that are kind of not been hit 12 times. And this one is not 12, but it's 4, which is kind of where we're not normally looking for. If we're able to come up and really base in this area and kind of shrug off that information about, hey, we're not any closer to a ceasefire, right? Again, there could be an opportunity for us to take this long into the end of the day. With everything being said, I am more kind of leaning towards the kind of going upside. Why? Because FOMC is tomorrow. And I think at this part, the market is pretty much like, you're only going to do 0.5. Joke's on you. And that's why we're seeing it continue to go higher. I would say the one area to watch out for, right above the 61.8 here in this easy draw, there's a little bit of a level. okay? A little bit of a kind of a push up with a little area there. On the flip side too, as of right now, you can see if we are able to finally break through, and if this is the top, we do have an area down there at the 50 where it may be a pullback area too for later on. I would say that this is probably where we would pull back to by the end of the day, unless Russia suddenly says, hey, listen, not only they don't agree, we're just going to turn the entire country into glass, right? So unless they make really big inflammatory statements, I don't see it continue to crash. I would say it come back, and it would be right around that 50%, which is also kind of where the 23 is over here, approximately in the 41.88 level. Okay. Now NQ also this morning we talked about this level. It's one that's been tested. It's not fresh again. It's been hit a couple times, but it was an easy draw 50%er. Again, same thing from top to bottom. Magically, right? We're hitting that 50% just as Putin says they weren't serious. Right? They're not serious. We just need to take over the whole country, right? So again, kind of the same scenario. It's already pushed back down again, but it did pull back into an area of buyers, which again would have been sitting right in there. So it kind of did do its turn. The big question is, if we start getting more volume back in there, are they going to take that statement, what he said, serious? Again, same scenario. We've already hit it once. I mean, it's been hit here, it's been hit here, it's been hit here, it's been hit here. So it's not the first time it's been at this level of sellers. Again, it would have been a very, very fast kind of scalping based scenario, taking the 50, using that down, and again, we could have, we could have refined this level a little bit. Actually, it would have been there, right? Had we taken this trade a second time. Did it do a 1 to 3? No, but again, on news like that, kind of see where we go with it. We're pulling back up into there now. Ways to trade this, you could trade this with some, binaries. You could look for some call spreads up in here. But in this case, I may even look over the knockout section, right? If we can get a knockout in somewhat close proximity to this level, that removes the kind of expiration threat of later today, right? And kind of plays us into FOMC for tomorrow. So, yeah. And the reason why I say that is because, again, sellers here. I'll drop these. Sellers in this area, we've seen them there. We've seen sellers here, and we've seen selling here. Okay, now if we get much past that, then it's really kind of off to the races to about 13,888. But for the most part, it's pretty decent right there, right? So a couple little hiccups, 50% that's already kind of pushed down and grabbed it. But again, as we further explore what Putin really means by they're not serious and what his response to that is going to be, yeah, we'll see. The other aspect too, I just want to point out too, you saw, I was looking for those headlines earlier, and I meant to bring this up, and I just kind of forgot about it. The pipeline, where is it? China says, yeah, we don't want to, we don't want sanctions from the United States. Oh, here you go. The digital yuan could challenge the US dollar. Yes, they're going to do that. Now it figures I can't find it. But basically talking about how China didn't want to do anything to get sanctions put on there by supporting, again, the more times that they use the dollar as a weapon, the more reason why other countries are going to want to remove the dollar as the world currency. So if it's no longer the safe haven, if it becomes a weapon globally and a threat globally, then they're going to remove it. So China's playing in here. China says it wants to avoid U.S. sanctions over Russian war, right? Talking about, China has the right to safeguard its legitimate rights and interests. Concerns are growing among investors that Chinese companies will face U.S. sanctions after Americans. So again, the more we use the dollar as a weapon versus a form of currency, the more motivated they're going to be to remove the dollar. So, yeah. Again, that's going to have effect over here in the indices. Okay. Now, YM also kind of similar. We talked this morning about YM, about it pulling up, but we didn't really have any clear levels that we really liked in it. This one's a little bit difficult in the fact that really this one is so linked with oil. I mean, it's linked with peace. It's linked with oil. I mean, you would say, well, wait a second, why is this one rallying, right? The other two were dropping. Reason why is because oil is continuing to kind of, oil is kind of, it's below 100. It's not bad, right? The lockdown doesn't necessarily help, but it's slowing things down. We talked about the 35,512 as being an area where it was really the first level that we were really interested in getting into any type of a short position. And we got a lot of room to run, okay? Top and bottom wise, we're still kind of pegged in here, and you can see that it's really just been kind of going in the sideways channel back and forth. I wouldn't really say, and again, I'll put it back to a 30-minute. I wouldn't really say that right now. Is there a true trend right now for the Dow? Not really, right? We were grinding down, and then we kind of broke out, and then we kind of put a higher low in and kind of a higher high, but then a higher low, and then a lower high, and then kind of you can see it broke out a little bit, right? And then we kind of put in like a little bit of a lower low, but then here's a lower high and lower lows, but now we've broken through the top side. So it's really more just channeling sideways. I wouldn't say that the Dow right now has a lot of direction. And again, a lot of this is oil going to stay low? Is it going to stay high? Is it the 0.25? It's the 0.25. It's great, right? I mean, that's awesome for the Dow, the 0.25. And that's kind of what's getting baked into the market right now. So really, if you guys know how to set an alerts, I would say the first thing I'd be looking for is the 33,517. Downside, again, if we do take a major turn, I think looking at this level at 32,452, is it an automatic long for me? No. But again, I like how it punched out of this zone. It kind of based and then exploded off of it. And I like how it was front run here. I think that's a decent area where, again, if we do see a big pullback, that could be a decent kind of takeoff point, you know? But we're going to need some news. We're going to need oil to spike for this to go down. We have to hear supply chain shortages for this to go down. I really don't feel that the 0.25 is going to be a driving factor in this one to make it go lower. I just don't feel that way. But I really like to see some kind of technical traders come in, particularly at the 33,500. Okay. Russell, obviously the weakest. We talked about that coming down. We talked about the 930 yesterday. It seemed like it was so far away, and you can see it collapsed and it bounced off of it, based in it. And it's like, oh God, we're gonna get through. We're gonna get through. It was like the little train that could, and then finally broke through this morning at about 5:30 in the morning. And again, this area, I mean, it had a hit here, and then it hit another hit, and then it kind of hit again and pulled back up and followed and went higher again, and then sliced through it finally. So again, hit. It just kept sliding through. So right now it's kind of in the middle of this last little surge. As I mentioned before, again, if this was the bottom, right, that 50% comes up to an area we have some sellers before a bunch of red candles in a row. That's up at 1981. Okay. It was on its way, and it kind of did do a little bit of a reversal. Kind of the Putin comments as well didn't help it. Right now, I would say if I had to do tops and bottoms again, if we readjust this after this got kind of banged around a lot, we were talking about it breaking. If we readjusted this lower and kind of moved it down, I would say that right now, top and bottom wise, it looks like we're looking at 1925 and 1981. If you know how to set an alerts, you can really kind of set an alert in either direction, right? Set one top and bottom, make sure you kind of know where they are. I kind of like this 1981 going into tomorrow. Not that 0.25 is horrible. It should definitely be 0.5 in my eyes, in my opinion, as well as some of the bigger financial people out there. I think if we can rally up, again, depending on what we do, if we rally up tomorrow before the news tomorrow morning, I think it could be a great short. What I mean by that is tomorrow morning we have this core sales, the retail sales numbers. They're expected to be much, much less. Imagine if they're even lower, right? Imagine if they are lower. If these come in at 0.7 or this is a 0.2. Technically, lower retail sales is bad for the Russell first. If we pull up into that 50 percentile area, and again, that's about 31 points away, that could be a decent short down for tomorrow before we have the news coming out of too. So again, looking for a potential news opportunity out of this level. We'll see what we're able to do the rest of this afternoon when really the volume comes back again. But if we do push up, again, that could be an end of the day rally as we prepare for the interest rate situation for tomorrow as well. Okay. Right now, other things to watch out for. Again, you're seeing Apple have a great day, kind of straight up in the air. Tesla also doing something similar, although now it's having a little bit more issues. Again, these are both helping drive the NQ much, much higher at 2.4%. But again, starting to see a little bit of red peeking in. Still a little bit early, 1235. We're not getting the actual push in there yet. Kind of setting up the same way, right? It's just that the Russell is a little bit farther behind. It hasn't gotten to its 50%. So again, what the FOMC does with tomorrow, huge deal. The lockdown also affecting it, but that's helping kind of relieve some of the commodities pressure a bit. And again, we'll see. Let's see if has there been any further. Oh, I guess this is a new one. That Russia submits request to leave the Council of Europe. I guess they were part of the council. I read something about this the other day. They were part of the council, but they were like, because we're a permanent member or whatever, we were able to do something, but then they were talking about leaving. I don't know. I don't know how big of an issue this is. I mean, the Council of Europe is not, it's not NATO. It's not NATO. But yeah, so further dividing the world. I was really trying to see, let's see, I wanted to see if there's more headlines. He stressed let's see. War against Ukraine, the EU is committed to continuing. Yeah, responding, providing further support, call for the immediate ceasefire and withdrawal. Yep. Discuss ongoing negotiations. Yep. Objectives of the film is an absolute priority. Yeah, so nothing more than just that they're not serious. That's what I was waiting to see if we got some more headlines, but we don't. The knockout effect. Yeah, central banks around. Yeah, they don't know. Okay, so wanted to see if we got some more kind of comments to, again, kind of look inside of what he means, what they're looking for that's not there. Russia's standpoint has been pretty clear from the very, very beginning with what they want. So, and I don't know if you guys saw this one or not. We haven't seen a lot of effects with it yet, but that the gas pipeline has been halted, right? They're starting to halt some pipelines. Okay. Again, they decided to just cut everybody off. Yeah, that's where commodities get absolutely insane. So, all right, so let's go down and let's look at currencies real quick, and then we'll end on commodities for today. So, Aussie was driving back down again. It got a little bit of strength in the overnight. It's pushing lower. As you can see, it kind of came up, and did it grab the 23.6 in a great way? Not really, and kind of pulled back. I think a lot of what we see in the next 24 hours is extremely important. Okay, news-wise, again, today we have nothing else, right? Tomorrow is where we have kind of the tennis match with the early retail sales, FOMC, and then the Aussie data. Aussie is typically associated with gold. That's where it's linked. That's what it's considered a proxy for. Gold is getting blasted. It's down to 1925 right now. So unfortunately, there's not a lot of factors out there that are helping the Aussie. Again, we've had a little bit of dollar weakness this morning thus far, and that's helped to kind of pull back up again. But the big question is, again, we have a level here, right? We talked about this being a level, but we weren't really looking to go long off of it. It was more of like a, hey, do we use the short, right? Because it had pushed it so deeply into the zone already. Well, guess what? It pushed it even deeper and hit it again. So this would be hit number 5 through this level. Is there room for a Harry Potter trade in here? It's pretty close, right? There's one little area right here with some buyers inside of it that is hurting it. But overall, I think this is probably a decent setup to the downside, okay? What this would look like would be a break / confirmation entry into this level. It only needs to move to there to be a 1 to 3, which you can see is not as far as the next buying area where we have kind of a confirmed barely touch at 70.96. So here's one kind of potential setup. And again, the way that you handle this one is you go ahead and we set a horizontal array where the line actually enters, right? Actually, this one would need to be there. And this would actually need to be up a little bit more to there, which is even better. And you just go ahead and you set an alert for a break of that one, right? You set an alert crossing, you'd say into there. Whoops, not HO, HP. Glad I can spell short. There you go. And what does this coincide with? This coincides with Australian weakness, dollar strength. So if we come down, we start the base in this level, particularly at the end of the business today. We know tomorrow we got retail sales and they're raising interest rates, both things that are very positive for the US dollar. So kind of setting up to what we see fundamentally. For those of you that aren't in the Discord channel or aren't part of the alerts or anything like that, that area is approximately a break of 71.65. Okay. Aussie yen, kind of the same thing. Aussie yen, we had 2 levels. We talked about a level here yesterday. Again, 1, 2, 3. We expect 4 to break, 4 slice through. And then what happened? There's a Harry Potter on the other side. Came down at base, it came up, it touched it, and went all the way down to the next level down below. Again, right at the news time, we talked about there being news in there. Again, easy trade setup if you guys were able to take it. We pushed down to that level, so we know there's some buyers, but again, because it drove deep, it was a target first, not really concerned, and it just went up and grabbed those same sellers up top. So, in trying to clear these out, I would say that the next kind of big levels here. So let's take this as our bottom. Let's run this bottom to top. You can see that 61.8 was really the target. The 50 didn't really provide much. It kind of chopped through and went back. We know that those guys are there. Let me see. Let's run it this way. Yeah, see, the 50 didn't hold it at all. If people using the 61.8 would have almost got stopped out on that one for the zone up top. So I'd say right now, again, this dotted line was an old kind of alert level that we were talking about. This was a higher time frame level. I think, again, that alert should still be valid. The last time we were up there, it was great selling. We talked about it being a 4-hour time time frame selling area, and you can see it's pulled all the way back. I think we watch that level for tomorrow. Okay, 85.76 is approximately where that is. It's a bit far from where we are right now. It's about 74 pips, so it's over a daily ATR of what we would need to move. But remember, the Aussie news is not till tomorrow night. This being the Aussie yen, there can be plenty of strength that comes in for the yen. So definitely enough room to get there before tomorrow night. I think we watch out for that level. Right now, top and bottom wise, there's a couple levels down below. I think there's a base right here that we've had price bounce off of twice, and there's a nice move. So that could be a potential. And again, we got a dotted line there. It's not an alert right now, but we'll reactivate that alert. We're going to reactivate that. Yeah, I would say that those are really kind of what I'd be holding out for. Watch both those two levels. And again, either of those two can be levels for tomorrow night. Right. One way that you can look for this is kind of see where we are, right, at the end of the day, or if we start to be close. Times that I would look at this is one end of day, which is probably not going to move too much. European Open, you can look at one of these two levels, or US Open, you could look at one of these two levels, and then go across and look at call spreads, or I guess binaries, depending on how much, premium is jacked in. Who knows? There could even be, when you have tops and bottom like this, they also, this opens up to knockouts. But I think probably binaries is probably the way that you want to look at this, just with as big as the news we have tomorrow. Okay. Euro pound. So we're looking actually for shorts in this one for pound strength to come back in. As you can see, again, we had mentioned this level before, right? We had one. You could say two. If you don't count it that as two, you could say this is two, this is three, and guess what? 4 sliced right through the top. Okay. Now we were looking for pound strength to come back in. That's what we're seeing today. So again, if we bring this a little bit higher, really nothing changes for me in this. We can bring that all the way up top. I don't know if I'd use that for short again. We'll see. Yeah, I mean, right now I'd be looking for a short going through here, right? 83.60. Again, it's a level of basing. We know we got really nothing in there. And again, as this thing runs back down to a 50% retracement, it's got to grind through here, which is going to be kind of a little bit rust. But 83.60, look for it to slice through. And again, profit targets. Let me make sure this is 1 to 3. Yeah, 1 to 3 is there. Pushing all the way back down into this lower level here. That's where the last buyers were. And again, it's below the 50. So you'd be getting out on that one. And again, very high on the curve on this. Again, with the pound raising interest rates on Thursday, the European Union not ready to do it yet. I think we continue to see this kind of fall back down again. All right. Euro yen. So Euro yen. We were so close. So close. We talked about 130.09. It made it to 130.04. So I missed it by 5 pips. Yeah, it was right there. We talked about it coming back down. So kind of the same scenario. It is high. This is a lot of yen weakness. Kind of my feeling is the same. Kind of bearish this position, kind of bearish the euro in general. I think if they start to retaliate, they've cut off one pipeline. We haven't really talked about it much. If they really want to kind of stick it to the West, when I say the West, I mean Europe. That's the best way to do it. Halt their sales. Not push it down. So I like this one more to the downside. I think, again, the yen is at risk. Again, the rising interest rate environment will also affect the yen. So, it's kind of a wait and see. I'm an if this, then that base trader. If you wanted to run some fibs on it, you'd have to run it from a couple different areas. There's the top, the bottom. But again, this level here, you kind of rechange trends, and then it kind of initiated itself a bit more. But I mean, if you wanted to take just the basic symbol people where they're looking, they're going to be looking down in this level, much, much lower. We got, 237 pips. It's a long time before we're going to get there. If you want to kind of dial in and say, hey, listen, here's the last big spike. We had lower highs. This was a different piece of a trend there. You can see that it's kind of in the middle of nowhere. Actually, I guess if you wanted to run it from there, same thing. You're going to run into probably some buyers in this area, but nothing I really like. I'd like to see this one kind of extend its gains one way or the other. But 130.01 is, or 130.09 is still that area up top we're looking for sales. Euro dollar. So euro dollar is kind of cutting back and forth. You can see euro dollar. We had that one little miss that was so close, and now since that time, it's kind of stabilized itself. Thinking on this one again. One. Let me just take another one. So it's sitting on top. 111.30. right, is a level we were looking for, and vice versa. There was a level of basing here, right there. But unfortunately, this was the takeoff point. We've pushed it. We've pushed it. I don't think it's going to hold again, but we have buyers here. We have buyers here. We have buyers here. We have buyers here. So really 108, 108.30 is really the next level that I'm looking for it to kind of come down to. There is some sellers up here. I really like to see tomorrow morning what levels are established in the European session and how do we play that into retail sales. I do think there is a news trade set up in the euro dollar tomorrow morning. Right now in the middle, though, I kind of need to pick a direction, and I need the Europeans whether send it up or down to be able to play retail sales, and then we'll look for a potential reversal for FOMC tomorrow. But right now we're kind of in the middle of the range. Again, not really interested until we get to either of those two. Pound yen. So pound yen made it about, I don't know, 1 to 2 down, came back up, grabbed some more sellers, right? And then went all the way back down to the profit target, and then came back up again, and now we're having the same problems. This is one of those ones, again, we knew we were going to have some issues in this area. It did come higher, and it came all the way up, and you may say, oh, look, 61.8. Yeah, it grabbed the sellers that were sitting right here and kind of accelerated it. That's what we ran into. So this is one of those ones, it's like, hey, had you taken this in Nadex, you got out. If you didn't, you were up 2 to 1, and you probably got stopped. It happens, right? It happens. Pulling this up right now, you'll see, now that we've gone up to that level, that target that we were talking about coming down to just happened to be now where the 50% is. So I think watch this one. Watch this zone right here. It coincides with where the 50% is versus the last low to high. The price of that one will come in at approximately 153.33. Again, it was a level that we were talking about it coming down to. It was a profit. That's why there's this solid black bar there. That's what the solid black bars are here typically when we're drawing them, is profit targets. Did what it was supposed to do. We're a bit of a ways away from that right now. It's going to be about 110 pips to the downside. This would need some massive yen strength coming into the market. That would be the next buy I'd be looking for, right? Do we take this one short again? I'd want to wait for it to get a little bit higher. And in reality, I am more bearish. I'm sorry, I'm more bullish the pound right now, particularly with them forecast to raise interest rates on Thursday. Kind of one of those things on a fundamental basis. Could it be a great short going into Thursday? Absolutely. But we're 2 days away from it right now, so it's a little bit too early to analyze it. So, but whenever you see something like this where you can take an easy low to high draw, and you have an area there where we had basing and it's already been tested at a 50% retracement level, you got to kind of mark those things off. Okay, so you should have that written down. Dollar US. All right, so dollar US. We were talking about a break of 130, right? We were looking for a push below it, a kind of a base and a pullback. It didn't break through. It literally rode the very, very bottom of that zone. But what this shows to me right now is there may be a couple buyers left under here, but this zone is no longer around. And again, when it tested the top, it says, yeah, that's it. So still like this trade. This is one, I don't know why I don't have an alert on it right now, but I'll throw that on there. Let's go add alert. HP confirmation short. There you go. Now, pound's pulling back, and you said, wait a second, you just told me you're pound strong. Yeah, I am pound strong, but we have dollar interest rate rising before then. So between retail sales and the Fed raising interest rates, this absolutely could push down. If it starts to base in here at all, then it's go time. So I kind of like this one to kind of come down and end down in this level and kind of base to get us into the European session. That may give us the bump in. And then again, if we can kind of pull back before retail sales, awesome short to the downside. Okay, and again, a break of 130 looking for 129.40. So 60 pip run onto the downside could be a nice little fancy trade there. Dollar CAD. Yeah, dollar CAD. So dollar CAD is getting completely jacked around by oil, right? We talked about this 128.30. We didn't really love it. Why? Because it had really hit already 4 or 5 times. And you can see it started the base ahead of it. And you're like, yeah, it's going to break, right? It punched through, took these people out, came back down, grabbed that same base, and then punched higher. Now it's reversing up top. So we don't need this level anymore. And we can kind of say, all right, what's next? Where are we going to go? I think right now with this turning around at this level, I think we can turn this into a red level up top and say, hey, listen, it had a hard time. Sellers stopped in. It hasn't made it up here again. Top side, we're looking at 128.85. We know we have a larger time frame level at 129.30. And again, that may come into play later this week with oil, right? I'm sorry, FOMC and oil. Now we have driven away we did get a nice push away. We knew we had some basing over here, and we knew we had a punch, and we tested it. So I think right now, for the first kind of next potential area, I would say that, whoops, I didn't want to move that. I would say right now, looking for this to come all the way down to 127.41 is probably what we're looking for, right? I don't really see the trajectory of this changing too much. So I'm going to change this and turn this into a profit target of 127.41. Do you want to get into it now? You kind of missed the boat on this one. There were some opportunities earlier, but kind of missed it right now. We're kind of in that racetrack, right? So once we hit that 127.41, could there be a reversal here? I would say, yeah, probably. At the end of the day, we're going to get the API oil inventory report. We'll see what that can do to oil. If we weaken oil anymore, right? If we have a large surplus this week for some reason, if the API is predicting that, that could absolutely lead to weak CAD, CAD currency data. So that could actually provide a pop. Tomorrow morning, could it do the same thing? Could this take a pop off of all this news tomorrow? Yeah, sure, absolutely. Bean stocks are not going to. I love that. Bean oil stocks. No, you don't have to worry about that one. Yeah, there you go. That's there. You can see at the end. So there's your first kind of hit. It's the last one over here, right? 6:30. Tomorrow, with all this news, again, that's where you're having this come in. You're having crude oil. You're having Canadian data. Could that provide an opportunity for us to go long from here with anything weak, or weak for CAD, strong for dollar? Sure. And we're in close proximity, about 50 pips. So we're kind of right in that wheelhouse. See if the Europeans drive us into that level. But I'd say target first and look for somewhat of a bounce. Look to see if there's any basing and kind of a bounce opportunity for CAD. But it's probably pretty decent. Dollar Swiss. So dollar Swiss got short, gave us the base, pulled back, went all the way down, and it made it to a 2.6, right? We made it to 2.6, and again, it kind of ran into, technically speaking, where it should have. It pulled back to the 23.6. It got within close range. So one of those ones you're like, God, I wish it would have went just a little bit farther. But not surprising now that it broke through the top, and we're going to make all the adjustments we need to. It kind of had some issues with this larger level, which is fine. We're really looking for levels all the way up top. The reason why this one continued to move, and again, this is actually not a bad placement if this is the new top. Ukraine and Russia both being very optimistic about kind of a ceasefire, both sides. That's a pretty good sign, right? And again, that will bring Swiss weakness into this equation, as well as the U.S. rising interest rates tomorrow is a strong dollar play. So with it rallying up, I would say at this point on a purely technical level, with everything we saw with all the headlines, I'd say that there's probably, the opportunity for some type of a short in one of these two areas is, kind of there. Think about it, right? Market in the past has called for 0.5%, right? It wanted 0.5%. Just because the forecast is 0.25, the market may be disappointed, right? They may be disappointed with the 0.25%. That sends this pair down, okay? If Russia does anything to intensify that war, that should drive more strength back into the Swiss. That also sends this pair down. So, are we willing to take the short right now? No, I would kind of time it with one of these two events. We got a couple events coming up, as well as what that does is that drags the 50. You guys see all the basing here? Buyer stepped in, buyer stepped in, buyer stepped in, buyer stepped in. Now that we have a new high, we know that just happens to be right around the 50% too. Is that going to be a new level for buying, or at least a target for shorts? Absolutely could be. Absolutely could be. So again, we're back in the wheelhouse of, if we find a top somewhere up in here, even up into this bottom level, that 50 is back at the same level. That's, again, technical traders are going to be watching that. So we'll see. But I'd say dollar Swiss is kind of setting up. And like I said, don't be surprised if it comes in 0.25 and we see the dollar drop tomorrow, because the market is disappointed. Dollar yen also on top. Now, dollar yen, we knew that this was going to be a little bit more difficult. We talked about having to find like a true top on this one, and we were up inside of a larger time frame zone. Again, we had, we're looking for this one because right now, with everything with interest rates and the economy, this one is driving it further. There was a level of basing that was formed, and it looked like it formed late last night, and then the Europeans kind of took it to the downside. We are approaching that right now. Am I willing to take this one short? Not really. I think this one has a lot of exposure to what happens tomorrow. Why? Because again, it could either strengthen or weaken the dollar. It's going to strengthen or weaken the stock market, which is going to make the yen play. So there's a lot of factors. This is like, I don't know, This is like trying to cook a meal with like 5 different pots and trying to have them all be done at the exact same time. A lot more complicated. I think there's easier opportunities out there, right? Easier opportunities are presenting themselves. Now, with that said, as far as currencies go, it is high. 118 is quite high for the dollar. It's been a long time since it's been back here for this dollar yen. So, I am kind of leaning more towards into the bearish mindset. But again, I think it's easier instead of taking this one, which is the dollar versus a proxy. I think playing the interest rate rises versus the dollar, I'm sorry, versus the euro or the pound will provide you better opportunity with less risk. If that makes sense. Okay. Now, currency front, obviously, Bitcoin, we'll mention it. Bitcoin is down. We really haven't left the trajectory. We talked about how we had a lot of basing right here at this 39,000. We took a drop. We came back up with base. We weren't back up. We tested 40. We came back down, and we're still stuck at the same base. Obviously, crypto is going to be on the hook with tomorrow. Reason why is you don't get a dividend for holding crypto. You do with the pound. I'm sorry, you do with the dollar. We're going to see what that really looks like tomorrow. Ethereum is up a little bit, but more or less it's doing the same thing. It's still chopping back and forth. Its equilibrium point is right where we're at right now versus, Bitcoin's was a little bit different. It popped down and then popped up and it equalized. Ethereum is exactly where the equalization is right now. So it's a little bit off. And then Doji obviously back down at 11. A lot of volatility going a little bit lower. And again, that has its own problems. And then bonds, as far as currencies go, you can see we kind of went low yesterday and we're kind of, again, holding firm. No one knows what we're going to do. Interest rates are bad for bonds. So again, kind of holding lower. Now, commodities is kind of the name of the game right now. So, looking at this, we mentioned it earlier that there'd be some levels to watch out for on the 30. We talked about with the Nadex presentation, is the bottom in, right? And the price went down and then we hit kind of this kind of push to the downside. And then about 11 o'clock today, kind of seemed like it was the bottom and it's pushing back up again, right? So, we kind of used this old level. And again, this was a level, it was a target at 98.74. We talked about getting there by the end of the week and it did that and it's out and there's not much we can do with it. We talked about the next little gap level a bit lower, and unfortunately, it didn't get down there, right? U.S. Trader really found and stabilized this one. And again, right around 11 o'clock happens to be right around the same time where this became public knowledge and people started talking about it, that, oh my God, look at this, they're going to buy 25%. They're talking. Saudis are pissed at the U.S. They're mad that we withdrew the way that we did from Afghanistan. So, yeah, right? So, oil, okay? I mentioned earlier today that I think oil has the ability to go higher, right? That I was bullish oil. It's still down. And again, a lot of this was in the overnight since the U.S. session when we talked. Oil, I said I was bullish oil today. And when we talked earlier, we were sitting right here at 95.74. It's now up $2 since that time. It did go down a little bit. You took a little bit of a heat, right? Is this the area of demand down here? I would probably say not so much, right? The reason why is buyers stepped in and it came back and buyers were needed at the same exact spot. They really stepped in around 93.54. I think this will retrace a little bit. Obviously, the comments of, hey, listen, the war is not as close as we thought. Those are helping. I knew there'd be profit taking because this is a lot of a short, very, very fast. And again, a lot of this is based with China, right? Again, 51 million people is a lot of demand. That's a lot of demand that has now been put on the sideline for at least just for the short term, right? It's not going to be a long-term thing, but it's a lot of demand, okay? Later on today, we have the oil inventory report in a couple hours, right? 6 o'clock, I think, right? 6:30, something like that. That's going to give us the foreshadow into what the weekly inventory numbers are going to look like. Remember, we've pulled from the strategic reserve. We're trying to get the prices down. I mean, it's great that oil is back at $97, right? It rose $30 and we went from an average of 320 or 350 or whatever, all the way up to I think 440 is what it was locally for me. It was like $1.20 that went up. Now that it's gone back down again, it's gone down 8 cents for me locally. Question is it going to continue to deteriorate this week? Well, will we feel that, oh my God, it's only $4 now. It's not 440. Ha! Woo, oil is cheap. I feel like this has the ability to go back up. I feel like every time this punches higher, people are getting more and more used to it. I don't feel that the 0.25 is going to be enough. I don't feel like the 0.25 is going to stifle. I think their goal with the 0.25 is not to hurt the overall kind of what they quote the economy, i.e. the stock market is what they mean. Again, demand continues to rise. Retail sales numbers tend to look good. Those 51 million people come back online. I feel like oil has the ability to go higher. So yes, it is up $2 from what I mentioned earlier today. I think an important level to look out for is going to be this 102 number. The reason why is because I think that's our kind of target top side. Reason why is because take the last kind of high to low. That's the 23.6. That's where people are going to look into shorting, right? Knowing how people are using tools, I think it has the ability to get there. Now, again, that market, closes in a little bit. We do have some basing right here, but I think the 23.6 would be a big level for people. Look for the API oil inventory report. And again, tomorrow morning, we also have, right now, let's see, are they giving us a forecast yet? No, they haven't given us a forecast yet. They're going to wait till later today, but this is what we've seen, right? We had that big surplus in February and then big down draw. Okay, down draw. And we don't have a forecast yet. So we'll see what the API number looks like for today. But for oil, I would say, really on a fundamental basis, I think when Russia gets to that stage, I think they will cut. I think they're going to cut supply to Europe. I think that's going to be, yeah. When you have something like Saudi Arabia pissed at the U.S., you have Russia pissed at the United States. When you have a lot of these oil-producing nations mad at the United States, and what our response is to ask Iran to produce more and ask Venezuela to produce more, I feel like the price is going to go higher, right? I just my gut feeling, but I think basically 101.93 is kind of where our target is at the top side. Now, natural gas also go down a little bit, but you can see, natural gas was coming down here to that 448, and you can see we hit that at about 10 o'clock this morning. And since that time, we have now rallied. So it's still down, but it's up a pretty decent chunk today, right? Looking to see kind of where your profit taking will be. Yeah, we're kind of right in that level right now. Again, this is what happens when you have one session that really dominates it. Am I willing to say that, hey, listen, it's time to get short natural gas? When we had world peace, probably. Now that there's one pipeline that Russia's closing down, I think this one probably has the ability to pump, go up a little bit more. Seasonally, it does make sense for this one to kind of more go down. But like I said, any comments, Russia does produce a whole heck of a lot of natural gas. If they're starting to cut pipelines and starting to be mad at other people, and I don't know if you guys saw it earlier today, like the rest of the world is like, oh, we're going to put sanctions. We're going to take people's yachts because they benefited. Okay, great. Now Russia is taking airlines. They're taking planes. If you have a commercial plane, they're just going to take it now. So you take our boats, we take your planes is kind of where we're at. We'll see what happens from it. Natural gas, I think, again, the 50 percentile, I'm not concerned about that, but I would say look for this area up top here. And again, for those of you that are looking to trade some natural gas, that would be $4.66 or 67 cents. Would be an area where our next sell is coming in. And again, it does coincide with the 16.18 on fibs. 50's got nothing there, not interested there. Gold also continuing to push down, but again, we're getting some profit taking. There's just so much shorts. I think if you can find an opportunity to get short this one, I guess if we've run the last, again, kind of a change there. Yeah, we're right at 23.6 right now. So, looking at the level of basing right here, could this be an opportunity to short? I would say yes. I think getting short gold is, anytime there's a bit of a rally or pullback, I think getting short is important. I'm at least down to that 188.88. That's kind of my next downside target on gold. And again, just doing a high to low. Again, this one blew through two zones, so we're going to use this as our new top. Taking that one down, you can see that the 23.6 is sitting right there. There's a level of basing. It did touch it this morning, and we're hitting it right now. This could be the next kind of push and roll back down again. And again, what looks like, the next big push down could break 1900, right? Could break 1900, which is a major level. And last but not least, silver. Silver is also doing some profit taking. We had talked about kind of an old Harry Potter here. We did get a base. We got a pullback. We hit it again, and it dropped down again. And then we rolled into a new session. We're 96 cents off, I still think, for this week. I can remove this now. I still think 24 is on the table. I see this probably coming tomorrow. Let's see if I do the same thing. Yeah, we kind of made it. We had some issues there. We made it through. So maybe use this old level that the last Harry Potter happened out of. Maybe we continue this across and adjust it slightly up to this level here. Maybe we look for shorts. We rally up for tomorrow. And again, 25.31. If we can be up at 25.31 for tomorrow at news time, tomorrow 16th at 2 p.m., which is right there. There could be a potential short right there, right? That we'd be looking for a punch to the downside. Why? Because rising interest rates is like, inflation time to die. So there you go, 25.30. But I still think we pushed to 24 by the end of the week. All right, so that's it. Like I said, the rest of this week is tomorrow is really the big day. Again, that's really the chock full of nuts. You got all kinds of things going on, starting strong with CPI, retail sales, jumping into oil right after that 10:30, then 2 o'clock FOMC, rising interest rates. It's not a matter of if, it's how much. And then afterwards, bam, we got New Zealand and then Australia talking about when they're going to start raising their interest rate. So it's kind of bam, 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 bam. Make sure you guys have extra coffee tomorrow. And ECB just 26 minutes ago says the ECB sees economic spillover effects from banks from Russian turmoil, which again goes back in that euro pound play that we were talking about before. A continued deterioration, which means this is weak euro. We see strong dollar tomorrow with the interest rate. That means euro dollar again. Look for those shorts pre-news. All right. So make sure you guys mark your calendar for next week, March 22nd, 12 p.m. Eastern Standard Time. If you have questions about anything I said, you guys are more than welcome to email me, support@keeptradingsimple.com. I'm still playing catch up from being sick at the end of the last week, so if you email me, it may take a couple days for me to shoot back, but go ahead and shoot me that message. Thank you for joining today. I will catch you guys next week. Take care.